friends, welcome, namaskar. So this is the next session regarding chapter number 1 of the volume 1 of the economic survey. So before we move ahead, let us quickly review the coverage that we have done so far. So we have seen that lavender cover captures the new and the rupee. The contemporary evidence with the ancient ideas is the focus. What is the importance of the wealth creation? So first, this chart represents that India contributed significant GDP in the past, and now the contribution is very less. Arthashastra as well as Thirukural both focus upon the wealth creation, but India deviated after the independence because of the socialist model. India returned back in 1991, and after that there has been a wonderful growth. Here we can see the three different growth patterns in the Sensex after the 1991. India's GDP, it has been growing and it grew very fast after the 1991. GDP per capita also, it grew at a very fast rate after 1991. Weak global economic growth. Why wealth creation is important? So it provides the benefit to all the stakeholders. Capitalism. The idea was given by the Adam Smith. Invisible hand. Wealth creation through invisible hand. How does it happen? So it happens through the interplay of forces of demand and supply. So enabling the markets is the key. And after 1991, we have enabled invisible hands of market, and which has resulted into the increase in the openness of the economy and optimal allocation of the resources. We can see in the growth of banking credit, and we can see in the growth of the mutual fund sector after the 2003, growth of the steel and cement sector, and railway versus roadway, right? So in every sector we can see those sectors which are open, they are growing very fast as compared to the closed ones. What are the instruments for the wealth creation? Enhancing efficiency, equal opportunity for new entrants, enabling efficient resource allocation, freedom to choose for the customers, vibrancy of economic opportunity, freedom to choose for the customers, improving ease of doing business, efficient financial sector, privatization, trust. And now this is the comparison of the share prices of BPCL and the HPCL. So here BPCL shares have been growing very fast after the disinvestment as compared to HPCL, which has not been disinvested. Now let us start this session. So the overall idea of the economic survey this year is that we can achieve the target of $5 trillion economy through an interplay of the invisible hand of market and the trust as a public good, right? So far we have covered the invisible hand of market. Now we will cover the trust as a public good. So this is the second aspect for creation of wealth and reaching the target of $5 trillion economy, right? So trust as a public good. What is the meaning of trust as a public good? So for that there are certain characteristics. There are certain characteristics through which we can identify that trust is a public good. First characteristic is that non-excludability. What does that mean? Non-excludability means that the citizens can enjoy its benefits at no explicit financial cost. That means they don't need to pay any amount from their pocket. So the people who are not able to pay, they will not be excluded. So everyone has an equal right to enjoy the public trust. So consider, for example, in a society, if every borrower who receives the loan from the bank, in 100% of the cases that person returns back the loan on time, then it is very easy for everyone to get the loan. Even any new businessman, old businessman, young person, old person, male, female, every person can get the loan without any extra cost, because there is a public, the trust is existing in the society as a public good. So this is non-excludability, right? So this is the first characteristic. The second characteristic is non-rival consumption. So the marginal cost of supplying this public good to an extra citizen is zero, right? So this is the cost of supplying from the supply point of view. So there is no extra cost. If there is a trust, then there is no extra cost. So the bank do not need to incur extra cost for giving the loan to a new person. When everyone is returning back the loan on time with interest, then the bank do not need to incur any extra cost for giving the loan to the extra person. Third, non-rejectable. Collective supply for all citizens means that it cannot be rejected. So when everyone is using the trust, then it cannot be rejected by anyone. So taking the example of that bank, any single bank employee cannot reject the idea that every person who gets the loan returns back the loan. So it is non-rejectable. It is non-rejectable. So unlike other public goods, trust grows with repeated use. So as more and more number of people return their loan on time, it will keep increasing, it will keep increasing, it will keep increasing, and therefore takes time to build. Yeah, this is very, very crucial. It takes time to build. It takes time to build. So connecting to your studies, friends, I hear a lot of time, sir, I am not able to recall. The answer is trust yourself. Trust yourself. Follow the fundamental rules of the game. Fundamental rule means you have to go in depth in every chapter. You have to revise the chapter. You have to practice the previous year questions. You have to practice the practice questions. And you have to revise again and again and again and again, right? So trust grows with the repeated use. Your trust on your studies will grow with the repeated use of the fundamentals, and it will take time to build. It is not possible that you can become the master of any subject in 15 days, 20 days. Yes, you can be comfortable. You can be okay with the subject in 15 days, but you cannot. I cannot expect that you can become the master of the subject in just 15 days, right? So everything takes time to build. Now, if we talk in the context of India, there has been a breakdown of trust in India. So starting from 2006, in 2006, Satyam scandal came on the front. In that scandal, there was audit failure. The auditors, they were not able to trace the fraud which was conducted by the promoter, Mr. Ramalingam Raju. So this Satyam case represents the audit failure. Even before that, there have been the failure of Enron. And after that, again, there have been many other audit failures. Secondly, there have been failures in the part of banking sector. The non-performing assets have been building up. There are willful defaulters, the people who willingly take the huge amount of loan, they default in repayment and they fly away from the country. So the impact is that the bank are not trusting the other corporates because the trust has been broken by the few corporate. The few corporate like Kingfisher, Nirav Modi and others, they have broken the trust of the banks, and banks are not ready to give extra loan, the new loan to the corporate. So the trust is broken by few corporate, but the adverse impact is borne by the other rest of the corporate sector, right? So audit failure is there, NPA crisis, and third, there have been allegations of the corruption. So in around 2010 to 2012, there was huge corruption going on in the different sectors of the economy, starting from the coal sector, telecom sector, Commonwealth Games. In all the areas there was huge, the mass level of corruption at the top level. That broke the trust of the foreign investors because they were not sure whether the amount that they are investing, whether that amount will be safe in future or not. So here first point you can see is about the corruption. The corruption perception index, this is issued by the Transparency International. So this can be a question, who issues the corruption perception index? So there can be a simple question. So there can be a simple question that who issues the corruption perception index? The answer is Transparency International. So it shows that India is at its lowest point in 2011, and in recent years since 2013 India has improved significantly on this index. So here you can see in 2011 the corruption perception index score is lowest. This lowest score indicates that there is highest corruption. And why this corruption highest in 2011? Because of the scams like 2G scam in the telecom sector. So there was huge scam in the allocation of 2G licenses in the telecom sector. Commonwealth Game scam, coal block allocation scam. Then after 2011, slowly this has been increasing. That means the perceived corruption is decreasing. That is a good sign. Coming to the loan defaults, as I told, there is a NPA crisis, and in this there is no problem with the NPA crisis as such. The problem arises when the big fish corporates, the big size corporates, they start misusing their position and they start willfully defaulting. So that impacts the other corporate because their credit supply is reduced because of the lack of trust. So this is the second evidence of breakdown in the trust. The third evidence is audit failures. So when a corporate intentionally misreports financial information, it harms investors by creating a negative externality, right, of low trust for all the domestic and international investors in the financials of the firms in the economy. So the investors, the foreign investors, the domestic investors, they will reduce the trust in the financials. Financials means the financial reports like balance sheet, profit and loss account, annual report. So these financial reports, they are the statement which tell about the health of the firm. For example, if a foreign investor wants to invest into the telecom sector, it will see the balance sheet of a telecom company. If the balance sheet represents the opportunity in the sector, then it will invest. Otherwise, it might not invest. And the problem arises that when this balance sheet is not reliable because of the audit failures, when this balance sheet of the telecom sector is not reliable, then the investor is left confused whether to invest or not. So that becomes a problem. So this is the third point. So the first point is about the corruption, second point is about the loan defaults, and third point is about the audit failures. Here you can see how the share of corporate loans, the loans which have been given to the corporate sector in the non-food credit has been reduced. So you can see in 2007 it was very less. Suddenly it increased. In 2013 it reached its peak. After 2013, because of the willful defaults and because of the NPA crisis, breakdown of the trust, the share of the corporate sector got reduced. That represents that because of the break in trust, how the availability of the credit to the corporate sector has been reduced. You can see the extent of wealth erosion or the loss which has been caused by the willful defaulters like Vijay Mallya, Nirav Modi. So if we see the social sector expenditure, the expenditure in the MGNREGA is 55,000 crore. In the rural development is 1,15,000 crore. The willful defaulters have caused the loss to the extent of 1,36,000 crore. So this is more than even the entire expenditure that India does on the rural development. This is a very dangerous situation. That we are losing 1,36,000 crore to the willful defaulters. That means the benefit is going only to selected few individuals. Pro-crony policies undermine the trust. What is the meaning of crony policies? What is the meaning of crony? Crony, right? So here the crony capitalism word, there is a word crony capitalism. And this word means that the policies are formulated by the politicians and bureaucrats in collaboration with the capitalists, and such policies are formulated in such a way which benefit the businessman or the capitalist in a disproportionate manner. So the businessmen are given the benefit at the cost of masses. So because of the unholy nexus between the politician, bureaucrat and the businessman, the policies are made to favor the corporate at the cost of the common people. This is what is meaning by the crony capitalism. So these kind of policies, they undermine the trust. For example, in 2011, the 2G spectrum allocation case in the telecom sector. So in that case, the rule of allocation of spectrum were favoring a selected number of corporate. There was no fair games of rule. So there were no fair rules of game. Because of that, certain number of individuals, they got benefited, and the rest of the people, they lost the money, right? So these kind of policies, they reduce the trust. Here you can see that those sectors or the companies which are connected with the sectors where the pro-crony policies are there, for example 2G spectrum, the telecom sector. So the companies in the telecom sector or the companies which have been associated with the pro-crony policies, their shares are represented in this maroon color. So you can see after 2010, when this 2G spectrum allocation scam came into the forefront, after this time the shares of these companies have been reducing and reducing and reducing. So they have been at a very low rate. And after 2010 only, in general, the BSE 500 index, the value of BSE 500 index, it has been increasing and even have reached its peak. So this contrast, that on the one hand the overall increase in the share market, and on the other hand the overall decrease in the companies which are connected with the pro-crony policies, this gap represents the adverse impact of the crony capitalism on the selected number of companies in the long run. So this is because of the break of trust. So again and again, all these evidences represent that trust as a public good is very important for wealth creation. If at any point of time we are losing trust, either in the form of corruption, in the form of loan default, in the form of audit failures, all that is going to reduce the trust and going to impact the connected companies, going to impact the credit availability, their shares, everything. The point is that we should follow the ethical and philosophical dimensions. We should imbibe the trust so that we can work for a long time. Now, how to identify that the trust is going to be broken? So we discussed that why trust is important. Now the question arises, how to identify that trust is going to be broken? How to apply the checks and balances? How to identify that what is the moment when the checks and balances should be applied? So these are the leading indicators. Leading indicators means they are the signals where we can open our eyes and ears and really look into the facts on the ground. We can see what is happening on the ground. First, issues in performance of business. If the business is not performing, maybe because of the sector is not doing well. For example, the telecom sector nowadays is not doing well. There is a liability of adjusted gross revenue based sharing, and because of that there are certain companies which might default, right? So maybe the business is not doing good because of the government policies, because of the overall global scenario. So some software companies, they might be facing the problem because of the policy of protectionism which is followed by the developed countries. So maybe the issues in performance of business are coming because of the factors which are beyond their control. But still, we need to identify whether the default is going to happen or they are in the stress. Second, weakness of internal control. Internal control means the checks and balances which are applied within the company. For example, internal audit, the systems and procedures, right? Standard operating procedures, SOPs. So whether they are existing, whether few number of people are having extraordinary power and rest of the people are having no power at all. So if that power imbalance is there, then this is not good for the internal control. So these kind of things we have to see, and we have really to see whether there is a power balance, corporate governance is there, every stakeholder is enjoying the rights. Non-compliance of the provisions of Companies Act. So when the company is registered as a company in the Companies Act, they have to comply with certain legal requirement. For example, they have to submit their balance sheet, annual report, profit and loss account, cash flow statement, all these financials they have to submit to the government on time, and government makes it public so that everyone, investor, employee, supplier, government, every person can go and see the transparent financial information. So is that being done or not? Qualified opinion or disclaimer of opinion. So this is basically the kind of audit report which is given by the auditor of the company. So qualified opinion means that auditor do not agree with the financials, the balance sheet and the profit and loss account of the company. That means the balance sheet and the financial statements are not reliable. Disclaimer of audit means that auditor is saying that even though auditor I am not able to identify any lacuna, still I am not able to find any evidence based upon which I can say that these statements are completely reliable. So the auditor shows the inadequacy of evidence, inadequacy of data, inadequacy of information. In that case also, the financial statement may not be completely reliable. Excess managerial remuneration. So in the Companies Act, there is an upper limit. There is an upper limit on the amount of managerial remuneration which can be given by the company to the top management personnel. For example, CMD, the directors, the CEO, CFO. When this managerial remuneration exceeds above a particular limit, then it shows that few number of people, the top management people, they are garnering major amount of wealth created by the company. That is also one of the leading indicator of stress or the upcoming default, right? So these 5 points are the first idea. Lagging indicators. Lagging indicators means that they are the point where immediate action is required. They are the red point, red signal. First, default in repayment of borrowing. So company may be borrowing from bank or maybe from the financial institution, maybe from the public in the form of public deposit, right? So all such kind of borrowing, whether they are being repaid on time or not, if there is a default, why the default is there? By when the default is going to be corrected? Whether the company is following the systematic procedure or not, all that needs to be seen. Second, insufficient provisioning or impairment loss. So if there is some probable loss the company is going to bear. For example, company has given the guarantee to its customer about certain product, and that product is now there is a news that that product is not doing well, and company might have to repair the entire batch of product which it has already sold. So there has to be some provision, there has to be some probable loss which has to be booked in the books. If this provision is not booked, then there is a lagging indicator. Third, the going concern issue. What is this going concern? Going concern basically is an accounting principle. This going concern principle says that unless there is any other evidence, it is assumed that any company will operate for an infinite time. So what is the impact of that? When I say that any company will operate for infinite time, that means the obligations which are existing on the part of company, they will be repaid in future because the company is going to operate in the future. The company can say that okay, I am having certain assets from which I can earn profit in the future. So we take it right because we know that company is going to operate in the future, right? So we always relate the company that the company is going to operate in the future just because we assume that company is a going concern. However, there are certain cases, there are certain instances where this going concern assumption is not valid. So we need to check those indicators. In case this going concern assumption becomes invalid, in that case we need to be alert because that means the company is going to default. So what are the cases in which the going concern issue can become invalid? First, accumulated losses resulting in erosion of net worth. So the losses are huge, and the accumulated losses means the past losses plus the present losses. The combination of both losses is increasing, and that is eroding the net worth. Current liabilities are in excess of the current assets, right? So the liabilities which are due within 12 months are more than the amount which have to receive within the 12 month, right? So this represents that there can be liquidity crisis, because our obligation within 12 months are more than our assets or the receivable within 12 months. Recurring losses or cash losses. So there are losses which are happening again and again. The sale price of product is reducing, the cost of production is increasing. Negative net worth, that means if we invested the capital of 100 crore rupees, now the value of this 100 crore capital is even negative. So we cannot even recover our capital. Suspension of primary business activity. For example, if Vodafone is operating in the telecom sector and because of some reason the telecom activity is suspended by the Vodafone, the Vodafone is no longer a telecom company. In that case, this gives a clear indication that this going concern issue is going to be invalid. Now, how do we restore the trust? The first aspect is that we have to avoid those policies which crowd out the intrinsic motivation. That means we have to promote those policies which promote the intrinsic motivation. The focus is upon the intrinsic motivation. So the good behavior that stems purely from intrinsic motivation represents a crucial complement to effective functioning of the market economy, right? So good behavior that stems purely from the intrinsic motivation. So the ethical and philosophical dimension is given importance. Therefore, the mechanism of reward and recognition for good behavior. So reward and recognition for the good behavior. So for example, if someone is paying the taxes on time and with proper amount, then they should be given some kind of recognition. Recognition has not to be only monetary, it can be in the form of a certificate. Maybe the people who are following the rules and regulations, their name can be given on the website of each and every department of the government. That will promote the good behavior, because the people always want to come in the public eyes for good reasons. So people donate so that other people can know that there are some people who donate for the cause of others. Similarly, if we reward and recognize those people who are giving up their subsidies, who are contributing to the Prime Minister Relief Fund, who are following the rules and regulations, the companies which are doing good in the corporate governance, so all these practices will promote the good image of the people, and it will promote the intrinsic motivation, right? So we need to identify the factors that underline the opportunistic behavior in the wealth creator. So those factors which promote the opportunistic behavior, we need to cut that out, and we should consider that processes which facilitate the trust creation. So we should reduce the secrecy, because secrecy promotes the opportunistic behavior. We should promote the transparency, because transparency promotes the good behavior. Reducing information asymmetry. Friends, have you ever thought in India why the government positions are considered to be so powerful? Why each one of you want to become the IAS officer? Is it because being IAS officer you have to do some very auspicious job? No. The answer is because an IAS officer has some privileges, some extra rights, and the work of an IAS officer can impact the lives of thousands. So in one word, can I say that the rights and privileges of the IAS officer are very high. And why these rights and privileges come? Because the people at the top, like IAS officer, they have huge access to the information, while the people at the bottom, whether they are in the government or outside government, they don't have access to the information. You might say, sir, we are in the era of Right to Information Act, then why are you saying that there is gap in the availability of information? Friends, even if we are in the RTI era, still there is a lot of information which is not open in the public domain, that is restricted to the public officials only. So even if we are in the RTI era, still information asymmetry is there. So we need to reduce this information asymmetry, right? So we need to standardize the enforcement systems and public databases so that everyone has access to the same information. There is no information asymmetry. We need to differentiate between the willful defaulters and the stressful defaulters, right? So the willful defaulters, they can be punished through naming and shaming, right? And downright unavailability of the credit. Enhancing the quality of supervision. Quality of supervision very, very important. Good governance means that supervision has to be very, very quick, efficient, effective, and fair. So equity, efficiency, and effectiveness, all these three have to be there in the supervision. However, in India, we see, if we compare the India's supervision with the supervision of the USA agencies, we find a lot of lacunas. For example, the Federal Trade Commission versus the Competition Commission of India. So in India, the anti-competition behavior is regulated by the Competition Commission of India. In USA, the anti-competition behavior is regulated by the Federal Trade Commission, right? So in the working of these two agencies, and another set of agencies is the Securities and Exchange Commission, SEC of USA, and SEBI of India, right? So these are the stock market regulator, capital market regulator. So if we compare the functioning of these two set of agencies, let us see the SEC and FTC. So these two agencies of the USA, they extensively use artificial intelligence and the machine learning. These are the two most recent technologies which enable the mass data processing and quick decision making to track and flag market malpractices, while none of our regulators do so. That means our regulators are not that much competent. They are not able to track the opportunistic behavior which is made by the wealth creator. So if there is some insider trading, that means if some top management person is misusing the corporate information to earn the profit in the stock market, such practices are not detected by the Indian regulators. The US Federal Trade Commission has one employee for every two listed companies. So every two listed companies, what is the meaning of listed company? The company which is listed in the stock exchange, whose shares can be bought and sold by anyone. While Competition Commission of India has one employee for every 38 listed firm. That is a very, very huge gap. So one employee takes care of 38 listed companies. Here one employee takes care of two listed companies, that too with the technology. Here there is no technology. So that means the quality of supervision is very, very poor. Securities and Exchange Commission has almost one employee for one listed company, in contrast with the SBI has one employee for 6 listed companies. Friends, this data you can use in your optional paper also. If for example, if you are in the public administration optional, you can use why the quality of regulation remains weak in India, because of the gaps in manpower availability, because of the gaps in the latest technology use. All these things you can utilize in the examination hall